Okay, well listen, I greatly appreciate the opportunity. I appreciate everyone being here. I know that after the holiday you're probably a little foggy. Hopefully you had a wonderful Labor Day. And if you're overseas, you probably took the day off as well because there's not much trading other than worry about North Korea. I'm with Hit the Mark Trading. It's just something that I created about 2008. I trade on my own, and then I just wanted to get into helping other people learn how to trade. The charts you see today are going to be provided by Trade Navigator. And before we go any further, remember that trading financial instruments using contract stocks or options is extremely risky. Please only trade with money you can afford to place at risk. Futures trading, stock trading, forex trading, all of this stuff is absolutely not suitable for everyone. Okay, understand that. Understand your own levels of risk tolerance. Past results do not guarantee future results. Please consult a licensed professional prior to trading using real money. Paper trade to learn any new concepts. Paper trade regardless of your level of expertise. Now, one of my mentors was a 50-year trading veteran, and he actually ran a hedge fund managing money, trading futures. And this guy, when he came across a new idea, he paper traded it. I mean, you have to. All right, so I've been trading for 25 plus years, 10 plus years as a full-time trader. I have a website, hitthemarktrading.com, and seasonalityforecasting.com. Basically what I do is anything I do is I work from the right edge of the chart, calling trades in advance, asking traders to follow this with me on paper so that they can get the methods in their own mind. This is me, my orchids in the background. This is my trading room at my house. And if you'd like to get more about just a trader's point of view, every morning I send to clients what I call Rooster Call. Just go to the website, hitthemarktrading.com, go to the contact page. It's the contact page, and you'll see how to sign up for a free 30 days of Rooster Call. And I think you'll like the information that I present. Again, I believe in you becoming your own expert, and I'd like to be your guide. Basically, we look at the charts in an all-encompassing point of view, looking at price action. We use a price oscillator. I believe in market linkage, and that's all due to the computers that control the trading. And of course, seasonality forecasting, which we're here to talk about today. All right, let's get started. By the way, if you have any questions, I'd ask you to please hold the questions to the end, and I'll take your questions, no problem. All right, so a little background on seasonal forecasting and me. I've always been extremely intrigued with the markets, okay, big time. And anything that has to do with gaining an edge. So seasonality, I've studied this for many, many years, okay? I've looked at cycle work, time cycles, and all kind of different things. And I've come to distill everything down into a very simple idea that smart money, okay? Smart money is doing the same thing every single year more often than not. So what we're talking about is the study of repeating price patterns based on the calendar. And I know some of you, I've lost you right there. Yes, the calendar calls the shots. This is a useful tool for your trading kit. I'm not saying that you simply work off seasonality and you forget everything else. Of course not. Of course not. Each one of you has their own method of technical analysis. I know that. What I suggest is, if it's in front of your face, if it's undeniable that there are patterns in the market based on the calendar, then wouldn't it makes sense, common sense, that you should try to look for a technical reason for taking the trade when the calendar points you so strongly in the direction. Now let's just take a look at this weekly yen chart, because it's absolutely incredible, beyond incredible. All right, let me get if I can get this bouncing ball here. I'm trying to find the pointer deal. Hang on. Okay, here we go. I got a pen. I call, down at the bottom, I call this a valley. I call this a peak. Keep it simple. Okay, so according to the calendar, price should rise. Well, hey, it went up. According to the calendar, price should fall. Well, hey, it went down. According to the calendar, price should rise. Hey, it went up. According to the calendar, price should fall. Hey, it went down. On and on and on and on and on. Now, last fall, according to the calendar, mind you, the calendar, this green line, now we were ready for this. And I mean ready at the starting gate. A couple ways to trade this. If you think the yen is going down, of course you can sell the futures. That was about an $11,000 move per contract. But some people do not want to trade the futures. So what can they do? Well, they can trade options. You can find an instrument that represents the yen, and that instrument is called FXY. And if you think it's going to go down, you can buy puts. If you think it's going to go down, you can sell calls in a spread. Now, there's going to be someone else talk today about options, so I'm not going to go into options. I teach options myself, very, very, very simplified method. But I'm telling you, all we did, if you can please comprehend this, we simply looked at the calendar and we said, you know what? This is incredible. And then we look for a technical reason to take the trade. And that's it. Knowing that the technical reason to get into the trade was one thing, but the seasonality was like the wind filling up the sail of your sailboat and pushing you forward. And that is what I believe is so incredible about this stuff. Now, I've showed you the remarkable seasonal peak calling for a price drop in that yen year after year. The seasonal valley calls the bottom. Use this with normal technical analysis. And of course we know that in life as human beings, nothing is 100% in life or trading. So I'm not about to stand up here and say this is the, the Holy Grail. I am going to tell you that if everything lines up and you have seasonal tendency also going in that direction, I don't care what you're trading, then you're going to be absolutely amazed. And this year, for example, for those of you that trade forex, the British pound has followed seasonality remarkably well. Let's see here. I just read that. Easy peasy, lemon squeezy. Okay, let me see if I can get rid of those erase drawings. Now, whether you are a stock trader, a futures trader, a forex trader, yes, you can benefit. Yes, stocks will follow seasonal tendency. Why is that? It's because we are talking about herd behavior. Okay? You've got to get that in your mind, herd behavior. You know, the professional traders, and I've been doing this for a while, the professional traders, these are not a bunch of rocket scientists. They really are not. Okay? I believe that price is a function of the psychology of all participants, their belief in the value for a given day. That forms a price bar, okay? That forms a price bar. Going further, I believe that it takes big money to move the market. Smart money moves the market, not the retail trader. Smart money moves the market. And smart money is extremely disciplined keeping the trading extremely simple. So our goal as retail traders is not to continually search, my gosh, I've got to find the Holy Grail. No. Our job is to be as simple as we can possibly be and learn to read the footsteps. We've got to be able to read the footprints of money. Where are they likely to go? Why? And that's why I am so intrigued with seasonality and want to share it with you. Smart money knows the bigger money is following trends, okay? Smart money adds to working trades and pushes the trend even farther in the intended direction. Now, you got new people coming up, right? Old traders retire. New people come up. New funds are formed. And these guys talk to each other. There's all kind of industry events. People go in the bar and they talk. Or people are working at one organization and they quit and they go to another. And new ideas or old ideas are shared. And what you find is that the reason Wall Street is no different than, Las Vegas. Las Vegas operates off a very simple principle and a very, very small edge. But Wall Street builds all these huge buildings and these outrageous salaries and bonuses, doing the same thing every single year more often than not. And they keep it simple. They don't have all these indicators on a chart. They're very, very simple. So if you will buy into the belief, my belief, that traders move in herds, and why do people move in herds, right? Safety in numbers, that's from the animal kingdom. So traders move in herds. Working with seasonality, we see the herd at work, typically moving the market in the same direction every single year, unless, of course, extenuating circumstances are taking place. For example, one of the highest rated seasonal trades is to buy crude in March, and you hang on to it until July. Guess what? It didn't work this year because we have what? A gigantic price war going on. OPEC started it, and now that they let the price war out of the box, they can't get the market back in order. So that is one thing where a seasonality that normally would have like an 85% win rate, guess what? This is the year, 15% of the time, it's not going to work. So we know that, okay? We know that nothing's 100%. Now there's two types of futures. You've got the natural commodities, and you've got your man-created financial instruments, such as bonds, currencies, interest rates, and equity index futures, right, etc. Agricultural futures, and I'm going to include the meats and the grains and the softs. Agricultural futures are tied to the seasons of planting, growing, and harvesting. For meats, you've got the birth, the raising of the livestock, and then the time of taking the animals to the stockyard. On both of these, extreme weather can affect them. But generally speaking, the same conditions occur each year. Now, a few years ago, the hog market, unfortunately, there was some type of a disease that was killing off the small hogs, right? The little baby hogs. They've fixed that. Okay, these are aberrations. I want you to remember that generally speaking, the same conditions are going to occur each year. So the smart money anticipates that this is going to be a normal year. Let's anticipate, for example, in the grains, a normal growing season. Now, yes, when the crop is actually in the field growing, you're going to have all kind of weather-related moves, jumping at the latest crop report. Absolutely, or the latest weather report, I meant to say. They will look at that weather report and they'll say, my gosh, okay, we might get hotter than normal, and they're going to shoot the price up. Suddenly the rain comes, normal, and then they drop it, okay? But in the very, very big picture, what happens? Farmers take the product to market, it overwhelms supply, and prices tend to fall every single year in the fall. Can you trade a repeating action? Of course you can. You do that with your technical analysis, right? So why not take it a step further and say, well, in the big picture, we have this repeating action where prices tend to fall going into harvest, right? Absolutely. Let's take a look at the corn chart, shall we? Here we go. That's gold. Oh, we'll come back to gold. My goodness. Corn, 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 corn. Corn, corn, corn. Okay. Here's what I want you to look at. The green line represents the peak. So I'm looking at this, and I'm looking at this. Okay? And I'm even looking at this. So, I'll blow this up for you. This date, according to the forecast, price should fall after June 9. Well, it fell. Price should further fall after 7/14. Hello. Price should further fall after August 25. Well, it looks like there's a little consolidation because there was this big drop here. How much was that drop worth? Well, let's see here. Let's just take it from here down to here. Okay, that was about $1,800 a contract, okay? So, since we are at a 353 is a support area, it's only natural that we should consolidate again before we drop further, right? And what is this? October 6th, we look for price to move higher and maybe dip a little bit more, but the overall harvest lows should be set, and from December 8, we start moving higher. And guess what? Every single year we look for this, okay? So if I just take a look at last year, here's the low, and what happened to price? Price went higher. Here's the other signal that we should be moving higher, and you see price kind of went sideways but then went higher, okay? So just imagine, now this is a weekly chart, just imagine if you trade corn, you may not trade corn, but if you trade corn and you've got a technical signal and the wind is, you know, blowing in that direction of the technical, it's a pretty good confidence feel-good factor, right? All right, now we don't just look at the seasonalities. Of course, I'm looking at other things too. I want to know, you know, what's going on with the overall market. You can see we've been in a big, huge downtrend here. I'll just point out real briefly, and of course, if anyone says what you're looking at hindsight, hello, that's what seasonality is, okay? But what I'm trying to communicate to you is we can also forecast with it. All right, so we were told to go long here, right? And add to the position there if you want, or go long there. This is a moving average I use, by the way. Let me get to my presentation again. Okay. Man-made futures. Central banks are the guardians at the gate. Now, incredible ultra-loose policy has called a 9-year bull run in stocks and stock equity index futures. So what does that mean? That means because of the man intervention, central banks, sell signals on equity index futures have hardly worked. But all buy signals work like a charm. Okay? All buy signals work like a charm. So let's take a look at the ES. And I want you to remember herd behavior. Smart money keeps the trading simple. What have you always heard? Sell in May and go away, right? Well, in the era of this ultra-loose monetary policy, there's too much money sloshing around, and so they just keep piling it into stocks. Let me just take a look at this ES for you. ES. Now, one of my favorite trades is to right here, week before Thanksgiving, or the week of Thanksgiving. Go out 6 months and buy options, buy calls on equity index futures. I don't know, it works 5 of the last 6 years. Okay? Why does it work? Well, this is a really good one because you've got all of Wall Street working to make it happen. All of Wall Street. From the analysts who write these glowing reports to all of the forecasts that come out, everything is designed for one single purpose: push stocks higher. And they do it every single year, more often than not. So, doesn't it make sense that if you are a stock trader or you're a futures trader, doesn't it make sense that come this time, end of October, November 17, you should be looking for technical reasons to take a trade big time. Big time. Okay? So, let me just get my marker. And let's see here. Again, the sell signals, they may have worked. This one worked a little bit right here, but you know, the central banks have screwed up the sell signals. Now here's a good one here. Here's a good one here, okay? And that was a pretty good one. I don't know if that's when China suddenly devalued or what, but that was wonderful. But beyond that, your blue lines are telling you to buy, and notice that these are just incredible signals. Not only do they run it starting in the fall, but then they catch their second wind in January and especially March. Okay? And I want you to understand this, they do this every single year. It's herd behavior. It turns into a self-fulfilling prophecy. So all you've got to do is follow the dates. Follow the date. Now here's one that didn't work. Hello. Okay, well, is anything 100% in life? No. That, unfortunately not. But more often than not, it is just incredible. Okay? So I'm not here to go over every single, this is an introduction for you to get you looking at seasonality, because I'm telling you it can be an incredible addition to your toolkit. It really can. And guess what? Come into November, and November 17, I'll be putting that same trade on. Okay, one moment. All right, let me go to, I wanted to show you gold. Gold, gold, gold. According to seasonality, we were told to buy. And up we go. This should actually be blue, not I don't know why that's green. It says it's blue, but this should be blue. So we were told to buy. And then in advance, we're told that around February 24, it can fall. So trading the futures or trading options, or maybe you buy GLD, how much was that worth? Well, just to that point, 8,000 bucks. It went even further. You see that? 10 grand. I don't know, how good does it have to get? Just keep it simple. Now, we were told here that it should fall April 28. And what did it do? Okay, it actually started the week before, and that brings up a pretty good point. These dates are not, I don't see how anyone can tell you on this certain specific date the price is going to move up or down. A lot of times, yes, that's true, but I've seen too many seasonal gurus that have put specific date, and if you trade on it, just that alone, you lose money. Okay, so what I like to do is say that seasonality is very powerful. I want to have a 2-week window in front of seasonality and in back of it. So we see that this move actually started a week before. Well, here's one of the things we do right here. So we got the signal, whoops, breaking this line here. Come on. Okay, that was the sell signal. And it coincided with the seasonality, okay? Now, we were told, okay, July 7, more often than not, price rises. Well, hello. Now we're being told that price should fall after this week. Okay, well, obviously there's this guy in North Korea who's causing some problems, provocation. But the minute that is resolved, what's going to happen? All of the geopolitical tension that has pushed gold higher will evaporate big time. Big time. So we have a date looking for a drop September 8. We have a date looking for a further drop after November 10. Write that down. And if you never see me or talk to me again, maybe I've shared something with you that might work. And then get ready to buy again. When everyone is focused on the holidays, smart money is launching orders in very low volume market, which means they can move it. And then that starts the cycle over again. This is gold. Okay? So, let's see what else I've got. I think that's it. I wanted to be very whet your appetite, and then I wanted to take any questions. I want to do one more thing. In case you're interested to learn more, I invite you, go to seasonalityforecast.com. And I do have the report that's got charts, I don't know, maybe 20, 30 charts in there, I can't remember. It covers up so many. And then people say, well, oh, can I have orange juice? Okay, so I send orange juice out later. This is going to be the only forecast you need. There's people who sell these things every single year. All you have to do is say, well, it appears that on the third Friday of every, I don't know, let's just pick on the third Friday of every April, it seems like this futures rises or this futures falls. And those dates are going to move around every calendar year, but the idea that it's the third week, that's what you're focusing in on. So I don't think you need to buy, even my report, I don't think you need to buy my report every single year. I think you need to consider purchasing, and then every single year when you get your new trading calendar, whatever instruments that are of interest to you, you go in there and you say, okay, look for seasonal tendency here with reason to go short from technical analysis or to go long. So I want to also let you know that I've got a video. If you go to this website, there's a video. And I think this video will tell you exactly my approach, what you're, oh, that's my rooster. Yes, I have a rooster. The video is going to show you exactly what you're getting in the report. You're not going to get a write-up heavy on statistics, because I believe that just like playing roulette or playing blackjack or pulling the slot machine handle, I believe that every year is a unique event. And I don't want to think of, well, if the crude is supposed to rise every single year starting in March, I'm going to blindly follow that. No. I'm showing you the charts. I'm showing you how they tend to move. And it's one of those things where if you're a visual person, seeing is believing, but you understand that nothing is 100%. So that's why I call this an introduction to seasonal forecasting. Okay? Now, I do have, for people that they don't want to handle the detail work, I do have a monthly update for futures, a monthly update for stocks. Just launched this in September. I'll be writing the first report this week. Just launched it. It's all new, but it's been something I've been following personally for years. So that's seasonalityforecast.com. All right, the rooster is here to remind you. Where's my rooster? The rooster is here to remind you that I give a lot of information out free in the rooster call. So you can please go to sign up, and there's no credit card required to get free 30 days. All right, now I will take any questions. If there's any questions at all, I'll be happy to entertain questions. Any questions whatsoever? Okay, here's one. Of all the seasonals, which seem to work the best? Well, that depends on every year. I'm telling you, the crude was really one of the absolute strongest. The ES was one of the absolute strongest. It still is. This year, the bond seasonal has worked like clockwork. Am I a fan of the movie Groundhog Day? Thank you, Bill. I would have to say, though, that in, day out, other than the seasonal tendencies for stocks, and the bond one's pretty good too. day in, day out, the agricultural markets, only because harvest, there's just too much supply. Too much supply. So they drop the price. We're looking for lower prices into September on soybeans, for example. I mentioned earlier the British pound, unbelievable. Unbelievable. You know, I'll give you a hint right now. You write this down. We have a very strong seasonal on the US dollar. Now, the first time I ever subscribed to someone else's work on seasonality, I simply did not know enough. But they hyped it up so much, and the person is extremely distinguished in the field, that it was like, well, if he says it, it must be true. And I lost money. So then I thought, you know, I got to dig into this myself big time. So one thing I'm looking at now is the US dollar around October 20th rising. Well, if that happens, it's like someone has set off a whole string of firecrackers. Because if the dollar goes higher, the gold tends to go lower. And of course, the euro moves like a seesaw against the US dollar. So those are just things I'm got in planned. This is the forecast, okay? All right. Let's see here. I would like to send you a few charts in your email. Okay, I can't give I cannot give specific investment advice to an individual. That is against the law. What I can do is give general advice. It should say consideration or trading idea. That's the better way to handle it legally. And that's why I do the monthly report. And by the way, I'm just starting this season. I've had the hit the mark trading for years. But the seasonal, I'm just starting it. That's why the monthly report is dirt cheap. It's like 25 bucks a month. I'll raise that price. You are very sharp, JQ. It is an agriculture joke, I guess. He was outstanding in his field. Geraldo, thank you for that information on Genesis Trade Navigator. Okay. I'm not familiar with the market scope. I used Genesis Trade Navigator, but I'm kind of setting my ways with it. Anyway, Amit, I would suggest you consider the report and consider, if you want further guidance, suggestions, to look at the monthly. Okay, are there any other questions? Now, I see this thing popping up here. Let's see here. Comments from the found in the questions. Okay. All right. All right. Well, wonderful. I'm always happy to help people to better their own trading. Thank you, Ken. I appreciate that. I'm always. It's boring and lonely being a trader. My background is marketing. That means I like to talk. So the teaching thing, it's a way to connect. I invite you to look at hitthemarktrading.com. I invite you to look at seasonalityforecast.com. And I'm an options writer. How can you help? I'll tell you how I can help with that. I'm a big time trend and momentum trader. And with the options, everything about the Greeks is implied in the way we trade. So I'm only interested in delta. I'm not a market maker, so I could care less about theta and gamma. That's implied. I'm looking for trend and momentum. So if I expect something to go up based on trend and momentum, then I'm going to sell puts. Maybe I will, and that's writing options, right? Or maybe I will buy calls in a spread. If something's going sideways, if I own the stock, then I want to probably, if I own the stock, I can always write calls against it. So it depends on trend and momentum. That's my whole existence, trend and momentum, and you can easily do option trading on that. Okay, and if the markets are not moving, you better learn how to non-directional trade, because I guarantee you we're going to see the markets again of 2004 and 2005, where all the action happened in the overnight, and in the daytime it was absolutely horrible. Those days are going to come again. They always do. So the people making money, the big, huge trading houses, were all trading non-directionally. And you've got to learn how to do that, even if you're not going to use it for a year or 2 years or whatever. Okay, I don't want to preach. I appreciate the opportunity to be here. I really thank you for signing up to listen to me. And I appreciate the host, Traders Talk Live. And if you have any questions, please, Martin at hitthemarktrading.com. Okay? That's how you can find me. And without anything else, I'll leave you be and I welcome the next speaker. So thank you all for being here.